Hi, I'm Richie Hecker, and welcome to the Cryptocurrency Masterclass. Today we're going to talk about investing in cryptocurrencies. Now, I'm not giving any investment advice. I'm simply sharing how I look at the market and what my personal views are, and take away from it whatever you may. So, first thing to keep in mind in crypto is, are you investing in equity or in coins? So you can invest in, say, the company that builds a cryptocurrency, which may be a C corporation, or you can invest in the currency itself. An equity investment typically is going to be a 10-year investment that is not liquid, not tradable, and may appreciate in value significantly as the organization gets more valuable. Cryptocurrency investment tends to be liquid much faster, is tradable, but may not have the same level of intrinsic value. Like in equity, you might get dividends, or the underlying intellectual property someone might want, so they buy the company for it. In coins, you're pretty much investing in a token or a coin or a currency specifically just to either hold that coin, currency, or token, or to use it in a utility function in the form of that token economy. Now, I use token, currency, and coin all interchangeably. They primarily mean the same thing. There's some nuances in how people may describe it a little bit differently based on being a security, coin, or a utility token, but functionally they're all a form of cryptocurrency, just the use cases are a little bit different. So we're going to look at, if you want to be long-term invested in the company itself, you invest in equity in those companies. That tends to be a registered investment. You need to be an accredited investor or a venture capital firm. You typically need to know the company unless it's through crowdfunding, and have access to make that investment, versus cryptocurrency where you can theoretically buy it on the public open market. You can either buy it in a pre-sale before, that usually requires knowing the company or the organization, or in the public sale, or you can simply buy it from an exchange and trade it like you'd buy a stock in the stock market. Now, I come from the equity world. I tend to like starting companies or investing or financing in operating businesses because they can produce cash flow and create intellectual property value. So that's where I come from historically. I'm now going into the crypto world. So what I want to do is share my investment philosophy is. Everyone should really determine their own, and only invest if you're an accredited investor is typically who should be investing in equity. In coins, in general, it's good to only invest if you're accredited and really have the ability to do so. I can share what my philosophy is. I've been on the founder's side, I've been on the financing side, I've been on all sides at different points in my career. So if I'm going to invest, I want to know that I have an edge. I look at three different main types of edge. Timing. I understand how the market works, and I have a good thesis for where the market is in either that one individual, say, cryptocurrency or stock or company, or a thesis on the market. And that is based on my proprietary research for why I think that I have a good thesis around timing. It's very difficult to do. Very few people can do timing consistently over the long run. The next edge is connections. In the crypto world is, do you have inner circle connections? Do you know people that are behind some of these offerings? Do you know the management team? Do you have a trust of the management team? Do you know of the management team? Like, how are you connected? Do you have connections to validate that offering itself? Do you have a connection so you can speak to the CEO? That's a form of edge. Third form of edge is knowledge. Do you have a mastery of cryptocurrency? Do you have a mastery of the industry that particular currency is trying to play in? So is it a coin around music? Do you know the music industry? Do you have a knowledge advantage? Your edge is what your competitive advantage is versus another investor. Otherwise, if two investors have the same information, no one's ever going to make any money. Trading is all about having an edge, either in timing, connections, or knowledge. Now, there are other ways you can do it. Do you have better trading software or algorithms to trade on? But we're not going into the advanced stuff today. Today is just my basic philosophy on investments and how to apply it to cryptocurrency. You either want to have a view on timing the market, either for the currency, the coin, or overall. I want to have better connections into that individual offering. So I know the principles. I want to be able to look someone in the eye before I give $1 to that coin and say, hey, what's going on? I want to understand is, can I trust them? Are they the right team to execute? Knowledge. Do I know the area? Is it in an area where I have subject matter expertise, or I have a friend or a colleague that has subject matter expertise? To validate the token economy, does it make sense? Will it work? Do they have the distribution they need for it to be viable? So those are the three areas that I look for in terms of an individual investment: timing, connections, and knowledge. And I want to understand what's my edge in that specific deal. And I recommend just go out and figure out what your characteristics that what you look for is. I'm more of a long-term investor than a trader, so I'm looking for things that give me a real competitive advantage versus another investor in the market. And I have my own views on the market, so I'll make a bet on timing sometimes. I have pretty good connections, so I can get to know the team and do real diligence. And I have knowledge in certain areas where I can either personally know or I know a subject matter expert to call that can tell me, hey, this makes sense or this doesn't make sense. So that's what I do. Now let's talk about it. Let's say you want to make an investment, you want to buy a token, you want to buy a currency. How do you validate that that assumption works? So it's called due diligence in investing. In the context of coins, there are three areas of due diligence that really matter: team, token, and technology. Team. Is this the right team to execute on solving this problem? Do they have the connections? Do they have the experience and the expertise? Do they have the maturity to execute on this? Do they have the regulatory understanding of the market to appreciate the complexity of crypto? Now, there are other things to look at in terms of team. Is any of the people going through a divorce? That is a really big red flag. I have a friend that told me about the investment strategy of one of the top investment banks. Really, white shoe firm, you know the name. He's like, well, if the manager is going through a divorce, that's a big red flag and no. Because you don't know the psychological state of the people involved. Is the team married or dating? Those are issues, because if there's an issue in their relationship, that can pop up in the organization itself. There could also be all sorts of weird dynamics that happen as a result of it being too close of a relationship. All these are solvable with corporate governance, which goes to the next part of team. Is the correct corporate governance in place to solve for issues? Is there stock vesting on equity? Is there lockups on tokens? Is there a voting process? Is there a board? How does the board work? How does voting work? If someone's not performing, what happens next? Is the team a team that's worked together for an extended period of time? What's the nature of those relationships? Is there a fabric of trust in the team itself? Right, you're investing in either a coin that's going to be an economy that's built by a team or the equity in a company. Well, that's what the investments I'm looking at. Is there a fabric of trust underlying the team members? Are they the right people in the right roles in the right situations? You could have people that are amazing people that are just overextended or out of their league. And it's the right people in the wrong role. And you can create all sorts of drama and blow-ups. Is the team a team that is willing to be vulnerable? Are they willing to take responsibility for what they're doing if they make a mistake? So the importance of any investment, to me, really starts with team. Ultimately, you're investing in the long-term growth of a group, an organization that makes up of people. So that's what you're doing at core. You're investing in people individually and as a team. Do they have the right experience? Do they have the right interpersonal dynamics? Do you have the right governance to make sure that people hold themselves into integrity over the long term? If you're investing in a coin or equity, really same. If you're trading, it's a little bit different, because trading, you're really playing movements within that currency itself. But we'll cover trading in a completely separate session in the future. So we've covered team. Next is token. Does the token economy make sense? Is there a real world comparable for what that token economy does? Does the token make the world or that industry a better place? Why do you need that token to exist? How does the token work? Like, is that token going to be used for something as a utility? Why is that token better than paying cash? Why is a token better than a software as a service subscription? How are those tokens created? How many are in circulation? Are they redeemed in some way? Do they expire in some way? Lots of questions. And then finally, is the token likely to get distribution and usage in the real world? Will the utility be there for the token if it's a utility token? How do you know? Well, ask the team. Do they have distribution thought out? Do they know how this will work? Have they done the research and homework? What you find a lot in the cryptocurrency world is a lot of people have concepts without doing the homework on distribution and actual utility. Double, triple check. Find industry experts and ask them to validate for that market segment what makes sense. If it's a security, does that what you're investing in, is it likely to actually produce the returns it's promising? And is there a way to get the money back out into cash? You'd be surprised. There have been offerings done where you were investing in something where there was no way to get your money back, and raised a lot of money. This is a Wild West world. Learn to ask the right questions about what's the token economy, utility or security. If it's utility, why does it need to exist and why is it better? What's the distribution? If it's security, it's how do you get your money back? How and why would it appreciate, and what's the distributions, and what are the risks? Finally, the last thing to look at is technology on the coin. Do they have the right underlying technology team? Have they done their smart contract correctly? Has the smart contract been audited? Is the technology itself validated? That's really important because ultimately digital currency is a piece of technology, and you need to make sure their technology makes sense, the smart contract is done well, and it's been audited correctly. If it hasn't been audited, you've got some serious risk exposure there. So to summarize, you have to understand what your time horizon is. If you're looking at equity, you're investing in a long-term appreciation of the operating business, the 10-year horizon. If you're investing in cryptocurrencies, I look at it as a 1-year horizon, which has the ability to trade out of it at some point. What I do first is I look for timing, connections, and knowledge to figure out if I have an edge to make an investment in that area, and I diligence it by looking at team, token, and technology. And with that, again, this is not investment advice. It's simply what I've learned as best practices and things that I've seen and done over the years and over the recent time in the crypto space. Good luck.